This is truly insane. BlackRock, the richest and most powerful company in the world, is quietly buying millions of XRP coins behind the scenes. This is one of the most bullish signals ever, ladies and gentlemen. Experts are confident that the price of XRP could reach $500 or even higher. Pretty cool, right? You'll regret it if you missed this video. Without further ado, let's get straight to the point. Disclaimer: rumors are swirling in the crypto space that two of the world's largest financial giants, BlackRock and JP Morgan, may be quietly positioning themselves in XRP. While no official disclosures have confirmed these moves, analysts and insiders are connecting the dots. Digital asset buy. In one featured discussion, digital asset investor pointed to Robbie Mitnick and Susan A., the only two individuals who carried out a formal XRP valuation back in 2018. Interestingly, Mitnick later joined BlackRock and notably removed his Ripple association from LinkedIn. Since then, BlackRock has spoken almost exclusively about Bitcoin and Ethereum, particularly in relation to its ETFs. But is that the full picture? Digital asset investors suggested it's unrealistic to assume that BlackRock, the world's largest asset manager, would ignore a utility-driven token like XRP. Instead, he hinted that BlackRock's silence may be strategic, adding fuel to the fire. Bradley Kims of Digital Perspectives explained how major financial institutions often talk down or ignore an asset publicly while accumulating it privately. This is part of the playbook, Kims argued, noting that it prevents prices from skyrocketing before accumulation is complete. He emphasized this isn't illegal, it's simply how Wall Street operates. Cammy's also connected today's speculation with past XRP allocations. He pointed out how R3 was once granted 5 billion XRP and investor Greg Kidd held option contracts for 1% of the total supply. If such deals existed in the past, why wouldn't other major banks or funds have secured similar allocations? Could JP Morgan or BlackRock have been quietly among them? Of course, it's important to note that these claims rest on circumstantial evidence. We don't have regulatory filings or blockchain data directly tying these giants to XRP yet, but the narrative fits a pattern. Institutions downplay assets until the timing is right. If BlackRock and JP Morgan are indeed accumulating XRP, the consequences could be explosive. XRP already stands apart from most cryptocurrencies because of its real-world use case and cross-border payments, its regulatory clarity in the US after Ripple's partial port victory over the SEC, and its deep liquidity potential. Adding BlackRock, the firm that manages over $10 trillion in assets, into the mix could, really supercharge demand. BlackRock's role in launching Bitcoin ETFs is a prime example. After years of skepticism, the firm's entry into Bitcoin didn't just validate the asset, it pumped liquidity, institutional access, and credibility into the market. If the same spotlight ever turned toward XRP, the price impact could be honestly monumental. As digital asset investors put it, it's not realistic that BlackRock has no interest in XRP. In my view, this speculation highlights a deeper truth. Institutions rarely show their hand until they're fully ready. If BlackRock and JP Morgan are positioning themselves quietly, retail investors may only find out once the big players already hold significant stakes. And by then, the price of XRP might look very different from today. But here is the big question: what is our beloved XRP really capable of? Could it be the hidden gem Wall Street doesn't want you to see yet? Trust me, some of the predictions from top crypto experts will Analyst Levi Reed took Wood's forecast and applied it directly to XRP. His conclusion: if Bitcoin really does hit $1 million, then XRP at $100 is not only possible, it's easily achievable. He explained that as institutional capital floods into the crypto markets, it won't just stop at Bitcoin. History shows us that when Bitcoin rallies, altcoins with strong use cases like XRP tend to follow, often with even larger percentage gains. Reed also noted XRP's strong performance over the past 8 months. During December and January in particular, XRP surged ahead of expectations, proving it still has serious momentum. And with the regulatory clarity Ripple gained from its court battle against the SEC, XRP is in a stronger position than ever to attract institutional flows. He's not the only one making this case. Veteran investor Steve Schultz recently compared the 5-year growth potential of XRP versus Bitcoin. His math is staggering. If you invested $5,000 in Bitcoin today and it reached $1 million, your position could grow to about $41,400, a 30% gain. But if you put that same $5,000 into XRP at around $3 and XRP hit $100, your investment would explode to $155,800, a 316% gain, more than 5 times the return of Bitcoin. That's the kind of asymmetric upside that makes XRP so attractive to risk-tolerant investors. And if Wells Fargo's prediction of $100 to $500 in the near term is accurate, we're not just talking about outsized gains, we're talking about a complete revaluation of what XRP represents in the financial system. Let's put it into perspective. With XRP currently trading around $3, the token has already delivered a 400% yearly growth rate, massively outperforming Bitcoin's 96% increase. A move to $100 would represent a 3,471% gain from today's price. In real numbers, an investor holding 10,000 XRP tokens worth about $28,000 today would see that positivity on skyrocket to $1 million if XRP reached $100. Crazy, right? But it doesn't stop there, because beyond the price talk, we need to look at Ripple's partnerships. And trust me, this is where things get even more exciting. The truth is, Ripple isn't just making noise in crypto, it's quietly taking over the world of global finance. And once you see who they're working with, you'll understand why XRP could be honestly unstoppable. So a recent development in the XRP ecosystem has gone beyond typical crypto chatter and could have some lasting implications for the network's credibility and adoption. Anders highlighted on X that LCX, which is a regulated digital asset exchange in Liechtenstein, has filed a Markets and Crypto Assets, or MyCA, white paper for XRP. This isn't Ripple putting out marketing material or anything like that. LCX has no formal ties to Ripple or the XRP ledger. Instead, the filing represents an independent regulator-facing assessment listed with the European Securities and Markets Authority. It offers a detailed, verifiable look at how the XRP ledger operates, including its consensus mechanism, governance, and energy profile. The white paper provides regulators and investors with transparent evidence to assess XRP's claims of decentralization. At the heart of LCX's analysis is XRP Ledger's Ripple protocol validators earn no direct financial rewards. Their motivation is reputational and functional. Businesses and services running validators do so to protect their own operations. LCX notes that this reduces the risk of manipulation and enhances decentralization by avoiding the economic concentration often seen when validators are compensated with native tokens. This approach is particularly compelling when compared to other networks. Proof-of-work systems are energy-intensive and can become dominated by large mining pools, while proof-of-stake systems can concentrate power. And this brings us to a key point. Global adoption could dramatically influence XRP's price. As banks, payment providers, and financial institutions gain confidence in XRP Ledger's decentralized structure, they are more likely to integrate it into cross-per payments and digital asset solutions. Increased adoption means higher transaction volumes, broader utility, and ultimately growing demand for XRP tokens. Historically, real-world use cases have been a major driver for price appreciation in crypto. With this regulatory validation and institutional confidence, XRP could see a sustained upward trajectory, particularly as the world shifts toward more digital and blockchain-based finance solutions. And of course, the whales couldn't stay away. Big players are already positioning themselves. And if history is any guide, that usually signals a real pump is coming. Trust me, you're not ready for what could happen next. And the moves we're seeing now could change everything for XRP holders. So the XRP market is buzzing, and it's not just retail traders making waves. Institutional interest is surging, with whales and large investors quietly accumulating huge amounts of XRP, nearly $1 billion worth in just the past 2 weeks. In that time, whales have bought 340 million XRP tokens, totaling almost $962 million, while more than $268 million worth of XRP has been pulled off exchanges into private wallets. This combination is a classic bullish signal. Coins held in private wallets are far less likely to be sold, meaning the supply available for trading is shrinking. Trader David Ed Martini highlighted another key indicator. Open interest on XRP jumped to $8 billion and funding rates turned positive. This suggests that traders are growing increasingly confident even if the price remains stuck in a narrow range. In other words, the market may be quietly building energy for a breakout, waiting for the right catalyst to ignite a significant move. So why does this matter?